Hey gang, welcome to another episode of Value Added, the real estate podcast. On this week's episode, we're chatting with Jorge Abreu. Jorge is the founder of Dallas, Texas-based Elevate Commercial Investment Group. He also owns a construction company called JNT Construction that focuses on helping multifamily investors with their full gut renovations and rehabs. Not only does he own about 1,700 units as a general partner, he also is a limited partner or passive investor in approximately 1,400 units, totaling his entire portfolio of about 3,100 units. So without further ado, let's get on with the show.
Welcome to Value Added, the real estate podcast where we speak with the brightest minds in the world of real estate who provide, create, and realize value in an ever-changing market. And now your host, Nick Walters.
Jorge Abreu, thanks so much for being on the show. I appreciate it.
Thank you for having me.
So, tell the listeners about your work experience and your career leading up to this point.
Yeah, to this. So it started back in college. I was studying to be an electrical engineer, and I felt like I had a passion to do something outside of engineering, and that turned out to be real estate. I did a lot of research into individuals that had a lot of success in their careers, and a lot of it came back to, at some point, they invested in real estate and made some pretty good money. So I started looking into, how to get started with investing in real estate, and that led me down the path of getting my broker's license and mortgage broker and real estate. Did that for a little bit, but the end plan was always to invest. So I finally got a coach to really help and push me along into starting my first investment and continuing to grow. Finally started doing enough deals where at that point I had a W-2. I was working in the engineering department at UPS. So I finally started doing enough deals in the real estate investing and quit my W-2. That was about 15 years ago. Did a ton of wholesales, a ton of fix and flips. Ended up opening a construction company. That was about 11 years ago to scale the fix and flips. Then started doing some new development. And then about three and a half years ago, kind of looked back at what I had done, what I had built, and I wasn't quite satisfied. It wasn't really what I had set out to do. And that's when I started looking more into multifamily, and my eyes were open to the world of syndication and taking down these large multifamily properties, which I did not know existed before as far as syndication and how that worked. I thought it was just really, really wealthy individuals buying these large apartment complexes or, large groups. And I really found my passion there in multifamily. And that's what I've been doing for the past 3+ years. I now have 1,720 doors under management. Got another 264 under contract now that we're working on closing, and trying to hit 10,000 as soon as possible and continue to grow.
That's great. Now, if I'm doing the back of the napkin math, 15 years ago when you started, you started right around the peak. Is this 2005, 2006 when you started your fix and flip business?
That's correct.
Okay. And you mentioned 3 years ago you mentioned that you got to a point you realized you weren't really satisfied with what you were doing. Why do you say that?
It was very transactional. I wanted to scale. I did scale. We were doing up to maybe 50 fix and flips per year, plus a ton of wholesales. But it was from one deal to the next. I wasn't doing many. We did some holds. I did some smaller multifamily properties that we held on to. I ended up getting rid of those. Wasn't a huge fan of the property management side of it, and without the scale, there really wasn't room to hire a third party. Didn't make sense. So I was very tied to what I was doing. To take a vacation was impossible. And if I did, I was on the phone 24/7. So I knew I needed to make some changes. I made changes on with the construction company as well, and it's been able to free up my time and let me focus on what I'm really passionate about.
So the steps you've taken to scale, you've gotten to almost 2,000 units in, let's call it 3 years, right? Since you started investing in larger multifamily deals. What are some of the steps that you've taken to scale your business? Has it been personnel? Has it been processes, systems? Walk me through the steps you've taken thus far to scale that multifamily business.
Yeah, I mean the two main things are the things you just mentioned. One is having a team, leveraging that team, relying on that team, and then whenever there's a process within the company and we don't have a set system for that, I take the time to make sure that we create that, and that way we don't continue to have to reinvent or we're just more efficient.
Mm-hmm. So you want to acquire another, call it 8,000 units in the next year or two. The processes and systems that you've put in place over the last couple of years, is that enough to keep that train going towards 10,000 units, or are there other things that you need to either put in place or refine to get to that number?
No, there's room to improve for sure. As we speak, I'm working on tweaking our acquisition systems and processes to be able to go through some of these deals quicker, kind of weed through the garbage, and start focusing on the ones that can actually be deals.
And how are you weeding through those deals quicker? Do you have somebody in place that's doing your underwriting that can, give you an answer in a couple hours, or what have you put in place to be able to underwrite those deals quicker?
We've got some high-level underwriting that we use, which can give us an answer within maybe 15 minutes of going through basic information. Now, this isn't going to give us, exactly if it's a deal or not, but it's going to let us know if we should focus more time on it. And then, so we have that process already, but kind of taking it to the next step to where when we start digging into the more detailed underwriting, where a lot of that information kind of dumps into our detailed spreadsheet, and just makes the process from beginning to end a lot smoother.
Mm-hmm. The deals that you are coming across, whether they turn out to be deals or not, where are you sourcing these deals? Are these brokerage relationships that you have in the respective markets that you're working in? Are these is this outreach with that you have somebody in place who is cold calling, potential sellers? How are you finding your deals that you're coming across?
Yeah, both of the things that you mentioned, it's mainly in the beginning. It was more cold calling. We did some mail outs as well. We kind of took what was working on the single family and brought it over to the multifamily. We felt there wasn't a lot of that being done in the multifamily. We had success with it, and then as we started gaining the traction and building those relationships with the brokers, we kind of went away from that. But we're starting to go back that route and just having both there.
Mm-hmm. Having a construction company as your outside of your investment business as your core business. As a fellow investor myself, I think one of the most important components, especially if you're a value add investor, is finding that right construction, that right general contractor to put in place to be able to execute your CapEx program, your renovation program. Having your construction business in place, I'm sure that's certainly that presents a value add to your general partners and your passive investors. Is that accurate?
That's 100% accurate. We have a lot of our passive investors feel very comfortable the fact that we have that in house, and then our co-GPs on the deal, if we have any, also like the fact that, hey, we're not going to get screwed over by the contractor, or we have somebody that's competent that understands what needs to be done with the capex in the property. So it's definitely a plus.
Your construction firm, do you do projects outside of the projects that you currently sponsor? Do you do third party construction?
We do. We do. We're very specific of who we want to work with, and so yeah, I mean.
And those projects that you are the general contractor of record, are these clients that do you invest in these projects as well as in a limited partnership capacity? Are you solely the general contractor of record? How do you structure those deals further than just being the GC on the project?
Yes, 100% I do. I've invested passively in several of them. Working on something now where we may be investing passively almost on every deal that we do the construction work on. Haven't quite worked out the kinks yet, but it's part of our plan. So we're looking to build long-term relationships. We're looking for investors that want to scale, and if they don't have to worry about the capex and we come in and take care of it, that helps them worry about the next property. So that's the plan.
So I'm just going through your bio here. Like you said, you have about 1,700 units under management as a general partner, but you also have, I think I read, about 1,400 units under management as a limited partner. What came first in that portfolio of, call it 3,100 units? What came first? Were you a general contractor that invested passively in some units, or did it come reverse? How do you come to amass 3,100 units? Pretty much half and half LP and GP.
It happened simultaneously, in a sense. I decided I wanted to do the active side, but at the same time, I wanted to also invest passively more to get that experience and know how to deliver good service once I had my own investors, if that makes sense. I wanted to go through the process and kind of experience it. That's how it started. And then, after I saw the tax benefits, then it just became like, okay, well, I need to be doing this every year and in several deals. So, and then it kind of just made sense to, okay, well, let me do it in the deals that we're doing the construction work on. I'm gonna feel comfortable that that's going to get done right, and it's kind of taken off from there.
So, what did you learn being a passive investor in projects? What did you learn from that process on how to make your limited partners in your projects that you controlled comfortable about the process?
I learned some ways to stand out, things that other investors weren't doing that I thought I could bring, um, and make the investor feel more like they're part of the deal.
Like what?
So, for instance, any investor that invests with us, they'll receive a hard binder like this, and it'll detail the property. It will have dividers within, with all the information about the property. So they'll get this in the mail, right after we close. So gives them something hard, something they can feel. We'll do a property tour, invite all the investors to tour the property before we really get started, so they can see it with their own eyes. We'll follow that up with another property tour once we've completed a good portion of the capex, so they can see where their money pretty much has gone. And then the updates and some other things that we haven't quite implemented yet that we want to get started.
For instance, what do you have on the docket?
You're giving all my secrets away, man. No.
Hey, you don't. I have to ask the follow-up questions.
Yeah.
Generally speaking, I mean, what are I really like to hear. Rarely do general partners also have as big a limited partnership interest in projects. So, you've played a large role in not only deploying your capital into projects that you're not in control of, being a passive investor, but at the same time you've amassed an equal size portfolio in projects that you do control as a general partner. I'm very intrigued by that. And not only that, but you also have a construction company where you're also able to leverage that component of your business. So I'm just intrigued by, what you've learned as a passive investor that you're rolling over into your the projects that hopefully could attract even more capital based on your experiences as a passive investor.
For sure. And I'm an open book. I'm just messing with you as far as
hey, that's good. I don't mind it.
Yeah. No, I mean, one of the things is we've noticed that, so not all passive investors, but some passive investors eventually want to be active, or at least have a couple deals that they're active in. So just offering the limited partner investors a chance to get more active if they want to within the deal. And that's just, giving them maybe some conference calls that we can get on and kind of go over what we've done, instead of just your regular monthly or quarterly email update. Maybe even jump on a asset management call. Haven't quite worked it all out, but that's the idea, give them more of the active side of things.
Yeah, that's cool. I mean, I do know some investors that will cut a check, and they may or may not even pull up their the monthly emails, or they won't get on a monthly or quarterly webinar for the investor pool. They'll basically set it and forget it, right? And they'll collect their quarterly dividends or their monthly dividends. But to your point, there are some investors out there that want to play a little bit more of an active role, where they do want to do a site tour, or they want to get on that weekly webinar or monthly webinar and know exactly where you guys are in putting together the renovation plan. So yeah, I mean, I can definitely respect both. As a passive investor yourself, what kind of passive investor bucket do you fall into?
The best kind, man. I'm truly passive.
That's
I'm
you said it and forget it.
yeah. I mean, when I invest passively in somebody else's deal, other than if my construction company is doing the capex, and obviously I'm involved there, but other than that, I've got enough stuff on my active deals.
Yeah. Cool. Tell me about the markets that you're involved in right now.
Right now, we're heavily involved in Houston. We've got a property in Dallas. We're trying to get some more in Dallas, seeing if we can get some opportunities here. The pricing is what kind of scared us away to begin with. Oklahoma, and Temple, which is by
Temple,
Waco,
Texas. Yep.
Yeah.
Mm-hmm.
Yeah.
And your general contractor projects that you're, the third party projects are focused in the similar markets, Texas and Oklahoma. Is that accurate?
That's accurate. We've got full-time staff in Dallas and Houston, and then we've got traveling crews and traveling project managers, and we can pretty much cover all of Texas, all of Oklahoma, and depending on the size of the project, I mean, we're willing to go elsewhere.
You grew up in Miami. You're a Miami native. Any chances of going back into that market?
No, man. I don't think so. Construction in Florida's tough, one. And then two, the economy in South Florida just scares me.
Well, because you've experienced both the high highs and the low lows, right?
Yes.
Yeah.
Yes.
It's very hard. It's very hard to rule South Florida out, especially me being a New Yorker, and seeing the growth in those markets in Florida in general, Atlanta, the Carolinas. I mean, not just coronavirus related, but the overall trend in population growth is definitely going in that route. You can also roll in Texas and other parts of the South and Southwest into that bucket, but the warmer weather states are certainly attracting more population these days.
Yeah, and I guess I should say South Florida scares me. There's parts of Florida I like, and I'm sure we'll end up owning some properties there, but I don't know about South Florida.
Gotcha. Are you passively invested in other markets other than Texas and Oklahoma?
Georgia. Actually, yeah, two properties in Atlanta. I think that's it.
All right.
The rest is in Texas. Yeah.
Cool. Listen, I really appreciate the time. We're going to conclude this episode with the hard-hitting questions. These are the 4 or 5 questions that I ask every one of our listeners. First question is always, what is your why, Jorge?
What is my why? My why is my family. I've got 3 little girls. They're 7, 5, and 4. Got a beautiful wife that's been with me through this entire journey. And that's my why, to give them the best possible life that I can.
Besides your alarm clock, what gets you out of bed every morning?
My why? Is that cheating?
Sure. Is there a recent book or a podcast that you've read or listened to that has significantly affected your life or career?
I read a lot, man. So I'm trying to think of one. Let's go back to Traction. I mean, I read it a while ago, and then began to implement the EOS system in my businesses, and kind of fell off for a little bit. So read it again and working on it again.
Cool. Yeah. I forget who. I've never read that. Who do you know the author off the top of your head of Traction?
Gino Wickman.
There you go. There it is, right behind you.
Yep.
I'll make sure I add that to our notes. Also, knowing what you know now, what's the best piece of advice you would give your 21 or 22-year-old college graduate self?
Skip the single family and go straight to multifamily.
Scale right off the bat, right?
Yeah.
Finally, how can our listeners learn a little bit more about you or get a hold of you?
They can check out my website, elevatecig.com. There's a free ebook on there, talks about the benefits of multifamily. And then if they want to shoot me an email at Jorge, however you want to say it, Jorge at elevatecig.com. Mention this podcast and I can send them over. I've got a due diligence checklist, questions to ask a sponsor before investing passively, and a couple other checklists I can send over their way.
That's awesome. Jorge, George, we really appreciate the time. Always grateful for dedicating 30 minutes to this, and thanks for adding your value today.
Thank you, Nick. It's a pleasure.
Thanks for listening. If you enjoyed this episode, please make sure to leave a rating and a review, which will help us introduce the podcast to other listeners. Also, don't forget to subscribe to our YouTube channel, which will give you access to other episodes you may have missed. Lastly, if you'd like to learn more about investing alongside us, then head on over to valueaddedpodcast.com. Have a great day, and we'll talk to you next week.